All right. Can everybody hear me here? Everybody can hear me? How we doing? Everyone okay? All right, perfect. Sorry about that, guys. Been having some tech issues here this AM. So we should be back to sort it out here a little bit, and we should be smooth, no big deal. So yeah, this week a little bit of a travel setup for me here, right? Kind of all over the place. The hotel I'm staying at, their Wi-Fi is pathetic. So I'm hotspotting this off of my phone. If you guys have any issues, um, yeah, please let me know. Is it still echoing? Is it still okay? All right, sweet. So I had a backup stream on my end just to make sure it was working. Um, so that's probably what you guys were hearing, but should be good to go. And yeah, so I'll try to find a solution for tomorrow. No guarantees I will, but it should be fine. Shouldn't be too much of an issue. And from there, we can kind of put together a really solid trading day, and yeah, just take advantage of whatever is out there. So, obviously, right, number one thing that we can see right off the bat, really big overnight price action, right? Pretty punchy gap up about 40 points here on ES. And so that for sure is going to create a little bit of a maybe slower market here this AM, right? We're going, yes, one exclamation mark. And so we're looking at an inside bar type setup here. And then the bull case, ORB fake out, then breakout, and we're targeting, what is it, 730. So our pre-market high is pretty much there. I reckon all things considered, we're probably looking for a move towards 6760. So we'll split the difference there, right? 40 should be taken care of by the indicator. And so we'll go 6740, so 6750, 6760, right, which is all-time highs. And then 60, 6770, 6780. And then we'll go 6800. I mean, I'm not super optimistic that that's going to be that much follow through here today, but let's cross that bridge when we get to it. And then we'll call this an ORB fake out, then break down. And again, we'll be targeting just pre-market lows, right? So we'll call that 700, so 67 spot. And then we'll go 6690, 6680, 6670. And that's again plenty of space there for us to get some follow through if it does behave that way. But again, we'll cross that bridge when we get to it, and we'll see if this thing has any enthusiasm. All right, NQ, will it load? There we go. All right, we'll go again inside bar here. So bullish is targeting, we're at pretty much 900, so we'll be looking at 25,000 right as our starting point. Fake out, then breakout. And we're looking for 25,000 as our starting point. Then we'll go 25.1. And all-time highs, right, is 25,000 effectively. That's plenty of space again, like 400 or 500 points. If we get that, I'm taking it and running. And then to the downside here, we're looking bearish. Again, ORB fake out. Then break down. And we're looking for a move towards 24/7. And then kind of our low here, 24/5, 24/4, 24/3. Cool. All right, sweet. And then the old CL green candle, increasing outlier volume, pretty punchy gap down. I mean, this theoretically should be setting up as a mean reversion setup. So again, right, 2 out of 3 to the upside with volume. And then pretty big gap down. So bullish, right? It's basically just mean reversion we'd be targeting. So ORB, let's call it ORB breakout, and then just mean reversion here is the idea. I guess probably the big thing to be worried about here with CL is that just how big of a move this has been overnight, right? We have a limit to the downside on CL that's maybe a little bit in play here, right? So we got 5% limit. So that means we could trade this towards 61.76 to the downside, right? So pretty limited space, not a ton of follow through. To the upside, we'd have a lot more space, so that for sure would be very, very interesting. Our initial target here, our initial target here would be towards like 65, right? So pre-market high. So 65, then 65.50, 66, 66.50, fine. And then to the downside, right? Bearish, ORB breakout, or fake out, then breakout. And I mean, again, like I said, we're a little bit limited on the downside, right? We can kind of effectively target towards like 62, right? 'Cause 5% prop firms will lock us out. That's 61.76, approximately 61.80. So we'll just call it down towards 62. So it doesn't give us a ton of space. So I'll go 63 as a starting point. 62.50. And then 62. So not horrific, right? Nothing too crazy. And we'll just do a quick little check here of our leading names. Oh, annoying. Okay, just don't load. No big deal. Oh, this is going to be a problem. All right, well, we'll just stick to the leading names for now. So there are these things with prop firms, right? There's these things with futures that they're called limit breakers, or circuit breaker limits. So on CL, that gets triggered once it's down 5% or more. So it's not um, it's just not a restriction that we can get around, right? The exchange will prevent trading at that point, so there's no reason for us to put any energy into trading it, right? So there's circuit breaker, I think they're called, or different places will call them different things, but that's the base idea. I got something I want to talk to you guys about, I guess, before we start the day here. Kind of an important topic I've been thinking about a little bit. Effectively, just around like, I don't know, however you want to call it. It'll be easier if I just bring this up. So, I think there's like, I was thinking about this a little bit on the plane. So there's like five bottlenecks, right? Or, I think five bottlenecks is probably the right way of describing it that prevents people from being profitable traders. So let's just go over what I think those are, and like how we can kind of work around that. So entitlement number one, or enemy number one of being a successful trader, is entitlement, right? Thinking that the market owes us something, that we're owed a win, that we deserve to be successful, that we deserve a trade just because we're watching or just because we've committed to trading. So it's that, past effort or effort in the market owes us a result or owes us a reward. That's not the reality with trading, right? All we can do is control the variables we can control. The market's going to do what it wants in its own way, and we basically can't like force it, right, with the intention of hoping that we're going to be profitable. The second element, right, is a lack of discipline. So discipline, I think, is probably the most misunderstood term, I guess, in trading. But effectively, it's about doing what needs to be done, even when you don't feel like you need to do it or you don't realize that you need to do it, right? So without discipline, your edge effectively becomes wasted potential because my ability to be a profitable trader only compounds as long as my losses don't really get in the way or don't exceed the numbers that we have kind of planned out. And if we do exceed those numbers, then we've lost that discipline, we've lost that control, and we've lost our mathematical edge. Third, right, is that we let our circumstances or our current situations overpower our past vision for our own futures, right? So I think average or unprofitable traders let their circumstances or their excuses, right, dictate their attitude and effort. So you had a really good day the previous day, so you don't do your preparation and then you pay for it, right, with a red trading day the following day. Or you had a really bad trading day, you're like, all right, fuck it. I'm going to try to make all my money back in one go. And you ultimately, right, compromise yourself. So my ability, right, to be successful long term as a trader only happens when I get to stick to my vision, right, or like that. The term I love using, right, is what feels best for my account in the moment rarely is what is best for my account long term. And I need to make sure that I control my variables, control my circumstances, so that vision over my long term portfolio actually gets realized. The fourth thing that I think gets in the way for people is like self pity or wanting to like feel sorry for yourself, right? So the fastest way to lose all your money is to start to feel sorry for yourself as a trader, to like remove your ability to be resilient and you give up that responsibility over something that you can control. So instead of fighting back, of being deliberate, of attacking the day, a lot of people will make excuses. They'll complain and they'll then self sabotage their ability to execute their next trade with the ruthless execution that they need. So it's really about confronting problems instead of accepting them. And I would really challenge you all, right, to do that because in trading, it is our own internal self reflection that ultimately makes us money, not our perceived feelings of it. And then the final thing here, right, is just complacency. So I've seen this happen to a lot of traders. It's happened to myself in the past, but it's basically like the moment where I think I've arrived, or my shit doesn't stink anymore. I think I'm, the world's best trader. I start to skip steps. I start to trick myself into thinking that I can break rules. I start to do all these things that aren't actually turning me into a profitable trader. It's like I'm letting the complacency of a previous result dictate my future outcome, and I no longer, right, and then behaving in my best interest. So I think complacency turns a lot of winning traders into losing traders because they lose that edge, they lose that hunger, right? They lose that fight, and ultimately, I think we're all better than that, and we should. So, look, there's five things I think we all need to fight against as traders. There are five enemies to greatness, or five enemies to profitability. I think that's a really important thing to start the week off here, kind of talking about breaking that down and going from there. But yeah, really want to share that with everyone here this morning. And yeah, hopefully we can set ourselves up with that in mind to have ourselves a very, very successful trading day. So obviously markets have opened here now, right? We're a minute into the session. And yeah, let's see what basically shows up here today, or what's in store. And we can go over that. So the five elements, right? Again, so it's entitlement, it's a lack of discipline, right? It's basically doing what feels best in the moment versus long-term goals, right? So short-term feelings versus long-term vision, self pity, right? Or feeling sorry for yourself as number four, and then complacency or ego as number five. And if we can control those elements here consistently, we're going to be in pretty good shape. If we're going to choose to ignore those things or only focus on one or the other or something along those lines, I think we're really gonna struggle there. So yeah, let's see how the day shapes up. Let's see what's in store here, how things kind of come together, but not necessarily expecting today to be the busiest of trading days. I actually kind of expect it to be a little bit of a quiet session. And yeah, let's see how the day comes up. I don't know if you guys can hear those dings, but we're gonna ignore those for now. And I gotta say, so I mean, I'm a little bit jet lagged here this morning, which is not really too big of a deal. But I woke up like normally the same time I wake up when I'm out west or in Canada. And so I've been up since, like 5:30 here this morning. It's 2:35 p.m. And I had like it's like when you see an interview with someone, usually it's like a sports person or something like that, and they just like don't know what to do with their hands. I kind of felt like that here all morning. I had no idea what to do with all my time. It was very confusing. I don't know if it's dimmer than normal. I don't think it is handcrafted. The wedding is on Thursday. So my stream schedule, guys, right? It has been posted in the Discord under the stream schedule tab. There'll be normal sessions today, tomorrow, Wednesday, and then no stream Thursday, Friday, and then back to it again on Monday, where I should be back at home and no issues. Yeah, I mean, I do have a multi-screen setup. It's not really my bottleneck. My bottleneck when I trade away from home is not really an infrastructure thing. It's usually just like not having the internet I need or something along those lines, right? That's my biggest issue here today is it's not real estate or screen space or anything along those lines. It's just internet. So like the internet at the hotel I'm staying at, its download speed is 10 megabytes a second, which is pathetic considering how much I'm paying for this place. Um, but hey, is what it is. So again, we don't really have any confirmations anywhere yet, right? We're still very much just kind of consolidating inside the ranges. Very, very slow open here. Very, very slow trading view. Yeah, well, I think flying with the Starlink Mini's also going to be a pain in the ass. So, you kind of have to just pick and choose your battles. This is, the worst internet I've had in probably 3 or 4 years of traveling. So it does just happen sometimes, but nothing you can do about it. So yeah, I'm like hotspotting off of my phone. Um, so we'll see what my phone bill looks like when I get back to Canada. It's probably going to be a disaster. All right, so again, we're looking for increasing outlier volume and a break and hold above the opening range. We're outside the opening range. We might get a break and hold here. Let's see. Might not get the increasing volume we need though. 10 seconds. We should get increasing volume. Okay, there it is. Let's see how this candle closes. Indecision, so I'm gonna have to pass, right? That is uh, no active setup, right? So the setup would be a break, close, and hold outside of the opening range. We weren't able to close, so the increase in volume is meaningless, right? Doesn't mean anything for me based on my strategy. Okay, what the hell, trading view? This is crazy. Oh my God. 20 seconds that took. Embarrassing. So I use a whatchamacallit, a MacBook. I think it's like a MacBook Pro or something. But if you have Apple products, so I have a iPad, and so I have my charts up, secondary charts on my iPad. I can, with this mouse, go from this screen to my iPad screen and control it when they're both on. And then I have a secondary laptop I'm using for my execution. So I've got like a three screen travel setup. It's plenty. It's more than I would ever need. Um, but yeah, I'm more just a little bit nervous about just how slow trading view has been so far this morning. Like if it's going to take 30 seconds to bounce between ES and QCL, that's a huge pain in the butt. My iPad, I have an iPad Pro, but it's like 5 years old probably at this point, maybe even older than that, and it's works fine for that. So I don't know what you'd consider to be older, but it seems to be fine. So we're at 42. Let's see how long it takes to get back to NQ. Oh, this is pathetic. There we go. So again, about 17 seconds to switch between like charts. Like that's ridiculous trading view. It is absolutely and utterly pathetic. I'm gonna lose my freaking mind here this week. So again, pretty indecisive here. We do have some 10 a.m. data today, so maybe the market's waiting for that a little bit. But if we're going to take anything from what we've seen in the last, I'll say 3 or 4 months, even at this point, it's basically um, if markets are, or if pre-market is like a big move, you tend to get a little bit of a slower open and then like a delayed reaction, right? You know, post 10 a.m. or maybe even around 10:30. If it's pretty much no pre-market move, um, then yeah, it does become a little bit of a more enthusiastic open. So far, right, we'll call this 12 minutes into the session. And this is not price action that has moved a ton. Maybe the other element here, right, is that we're a little bit below a psychological level. So, a round number at that 900, that could for sure be something that it gets like a little bit sticky towards. And just seeing that initial reaction to that area is also going to be quite telling on like how aggressive today's price action is going to be. So, like as a rule of thumb, right? If we're going to be playing a breakout through a psychological level, like we're seeing here right now, right, which is a breakout through 900. We've seen a lot of volume show up here on this candle, but we've also seen like pretty much an immediate separation and pop away from 900, right? Which probably tells me that it's a little bit of a stronger breakout than not. Obviously, we'll see if this thing holds, but generally, when a move is strong, it should be strong early and strong right away. And if we're going to be getting a positive reaction to that psychological breakout, yeah, you definitely want to see that enthusiastic reaction right from the get-go. So just my secondary charts, guys, it's just a chart of ES and CL, right? So I have effectively just visibility over all the tickers that I trade at any given time. All right, so we will be watching NQ here to the upside, right? We already have a very strong volume profile. It's going to be second strongest volume of the day. We're holding above, right, 900 for now. Appears to be a, call it most bullish candle here in the short term. And I'd probably just do this, right, as what I'd be looking for here. but we're going to be pretty patient with this thing. Okay, so immediately that makes a higher high. And I'm going to do a lot of what I did there last week, right? And the week before, where once I get a confirmation, I'm going to be looking for effectively a bearish failure first. So if I have a bullish confirmation, right, I want to see bears fail in their attempt to reclaim control. There's a couple ways that we can visualize that, right? So as like a little fake out under, at this point, the entry candle high. I also might be able to play this on the 5. Let's see. Maybe not. I really don't like how slow trading view is. If it's gonna be like this every day this week, I'm gonna lose my freaking mind. 417, so let's see what it's like when it comes back. Sweet. 20 seconds to switch between time frames is utterly pathetic. That was interesting. And so again, team, there's no rush for me to chase anything here, right? I want to be extra deliberate, extra patient, see those bulls like have a clear runway, right? That's really what I'm looking for here. I don't want to get stuck in something dog shit. Yeah, this is very likely to give me increasing volume. So, okay, I couldn't get an entry on this initial candle, and this thing closes in 30 seconds. I have more than enough evidence to suggest that I can still get an entry here. So again, no rush, right? If a trade is strong, it'll give me more than one chance to enter. I don't need to chase bullshit price action just because I'm feeling impatient or because I had a good week last week, right? I want to control the variables I can control and not allow circumstances to trick me into doing something I don't want to do. Not the strongest close, but I would still say very much in play. I mean, if I'm going to play this, right, it would be something like that. But if we pull back into that blue line with this pullback entry technique, I'm going to assume that we get a fake out under that 911, right? Never forget. So, yeah, if we do get an aggressive, that does maybe make things a little bit easier for an entry. And I'd probably go like 940-ish, right, as my reference price on an aggressive entry technique, something along those lines. Get a breakout above that 944 and then a gentle pullback back into that blue line. And so at 14 points, right, that would be a one contract play, risking approximately $280. But there's no reason to jump in here yet, right? I still want to be a little bit patient. I still kind of want to see that bearish failure first. And once that gets established, go from there. Yeah, I mean, there's a very good chance, John, it could be. The other reality, though, right, is that because I'm based in the UK right now, it's going to be feeding from a different server. The speed with my hotspot should be fast enough, right? I should be pushing, um, yeah, like 30, 40 megabytes. So that's not really the bottleneck. That's reasonable as is. Okay, so now we are looking for a gentle pullback here, guys, into about 940-ish. We have 10 minutes till market data, so plenty of time. Okay, that was probably a little bit too fast of a pullback there. It was like trap door fell out a little bit. So again, just one contract play this would be, not more. But it's struggling to want to pull back into my entry price. So again, I might have to reset this. Yeah, very impressive early squeeze. I guess a lot of this could be with just dollar weakness that we're seeing here today, kind of creating a bit of a bid in equities. Okay, so again, still watching here. Nothing is wrong, or like my idea has not been invalidated, so I could still very much look to take this trade. And just be patient. Again, I still kind of want to see that bearish failure first. I do not need to be in a rush. Okay, so still waiting here. I literally got my hands on my head, right? I'm not even ready to press the trigger, so I'm just being very patient, guys, right? I have not gotten kind of the reaction I would have liked to have seen or trust yet, so I want to be very patient here, very deliberate. And again, like I want to stress, guys, I want to take a trade as much as the next person, maybe even more than anyone, but it has to be perfect. I'm unwilling to compromise. Okay, there's that, what would have been a stop loss. So again, we had the right feel, right judge of market environments. Let's see if this now ends up being the little fake out scenario we talked about. So that would put us a stop loss at 921. 4 points of risk. It's pretty tight. It's pretty nice. 5 points of risk. So that would be a little bit more aggressive, right, at that point. Okay. So I am watching here, guys. I am watching. It's a great reaction. So at this point, I could go two contracts. I might have just missed it. Again, there's that fake out though. So we can get the aggressive entry technique here now. Should be back in play. That's the bullish failure, right? They had the attempt to go bearish engulfing candle and they couldn't do it. Just a bit unlucky we couldn't get that entry off of 927. That would have been really nice. John, don't overthink it. I'm at a hotel. I'm in a travel setup. TradingView is one of a million charting platforms. Don't put the cart before the horse, right? Like guys, we spend too much energy, too much time focusing on things that do not matter. Please don't overthink it. It has not impacted my ability to place a trade. So like, who gives a shit? Okay, so we got 6 minutes here till data. I am watching. This would be 5 points of risk. I go three contracts here. Okay, guys, I am in average price 950.25, three contract stop loss at 946. Let's see if this can go. I don't like how it feels like it's hitting a wall. Okay, I got stopped out. Hit a wall. I had like a sneaky feeling that I should have gone out and I didn't take it. A little bit frustrating. Okay, we'll potentially try that again, or on a different thesis here. Realistically now, right, gonna wait until after the data. At this point, right, so we got a couple minutes till 10 a.m. data. I'm just gonna wait for that. Okay, I still did a pretty good job managing my risk there. $300 on that loss. And again, it might be setting up as a little fake out. Okay, never mind. Yes, it's kind of just stuck. So NQ for sure is the better thing to just keep focused on. But yeah, like I said, we got 3 minutes to market data. I'm just going to wait for that at this point. Yeah, 2 minutes. Be patient. Oh man, why did I click yes? That was a bad decision. But yeah, guys, just as a general theme, right? Maybe point number 6 of the things I talked about here today. Keep the main thing the main thing. Like, the brand of tool you use is not going to be the difference between you being profitable or not, right? Like, you guys should have seen the tech issues we would get when I was working institutionally. And that place printed money more than you could have ever imagined. And look, the more that we give ourselves excuses, right, or give ourselves reason not to, we just give ourselves permission to not go after the things that we actually want, right? Okay, so a little inside bar again. We got data dropping here. 2 seconds. Let's see how it goes. If it creates a reaction. So far, no. Again, we'd be targeting a move towards 500. 55 to 41. That'd be 14 points. Not sure if that's what I would like. It's not terrible, but okay, let's see if this thing is the fake out now. Okay, right, and previous stop would have been 41. So let's see. Well, I would say 41 to 27 is probably a bit punchy, so I'm not going to be looking for an upside trade here. And this has a chance to go reversal here, right? Could argue fake out confirmation. We would call this a fake out to the upside if this closes above 41, right? So that's where our original stop loss would have been. So if this thing closes, 946 or something, then again, right, fake out scenario. Well, it looks like it's not going to. Question is this going to be a strong enough candle for a confirmation to the downside? Now, guys, I don't want a 961 stop loss. I don't. I'm not interested in that. But just putting this for now, right, because this is going to be our default entry technique, right, is always looking at the pullback first. I would much prefer the aggressive. Right, so I could do something like this. 10 points. I could go 2 contracts here. That would be fine. Have we made a lower low here? Yeah, we have. 6 points. Okay, guys, I am in. Average price 927.75. 2 contracts. Stop loss at 936. I don't like this reaction again. Come on, die, die, die. Hmm. Okay, I got stopped out again. That's a little bit annoying. So that's about minus 600 on the day here. Kind of a tough start. Hmm. The annoying thing here is it's on the 5 min. It's giving me basically the same thesis, right? But just on the pullback technique instead of the aggressive. I would need a pretty freaking big pullback here to feel confident in this. I would also probably want to see a fake out above the high. Okay, so let's see if this does a fake out above that 960. I would be looking for a possible fake out entry here. Reasonable rejection. Okay, still watching here. Okay, watch the fake out above the high. There we go. What a freaking explosion through. Any day now. There we go. You gotta be patient here, I think. Let's see if we can get that volume on the 3-min, maybe. Uh, why isn't price moving? There we go. Okay, again, is this going to be a rejection thesis? A bit annoying. So this was the previous high. That's very much a fake out above it. So looking at 964, 14 points again at the moment. Probably a little bit more than I'd like. Get that there-ish. That would be really interesting. And so this continues to be my confirmation, right? This is just my fake out higher. I don't care that it's increasing volume because it could not hold above the previous high of day, right? So I know that a lot of that volume is actually just sellers rejecting, right, that move higher. So that doesn't bother me. If I don't get a look here, it should set up on the 5. And every time I switch time frames, that's, 20-second round trip. Maybe not on the 5. Might have to wait this out on the 3. Okay, guys, I am in 957, 3 contracts, stop loss 964. Just want to manage this just briefly. Give me a second. I will write this out in a second. 957 entry, 957 on the short. Come on, die, 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 die. Oh, NQ, not NA, sorry. Keeps bouncing off of 957, which is really annoying. If I could get under 950, I think this thing will flush. If it's going to keep bouncing around here, then I'm going to be early, not necessarily correct. But there we go. Let's see if this thing give me some follow through here now. Come on, flush, flush, flush. There we go, team. There we go. Let's see if this thing can keep going. And that should put you about break even on the day here. So let's see if this thing can crack. There we go. There we go. There we go. Maybe a little bit less volume than I would like. Right? That's pretty light on the volume, I would say. Probably not a very good indication of trend reversal on that kind of volume. All right, fuck it, guys. I'm out. I'm out. 943.75 exit, 943.75 exit. I really just don't trust that volume. Just not enough. Yeah, it's just not enough. So I'd be willing to retry this or reattempt an entry here. But that volume's not enough. Like, it's suspicious. It's not good enough. And so if I could lock in a little bit of a green day there, I got to take it, which I'm happy I have. Right? 57 to 42, call it 15 points. That's not bad, right? 15 times 60, not a bad morning. Nice work, John. Well done. And yeah, if you have a 10-minute delay on your data, Morgan, you got to get that taken care of. I would highly recommend watching the videos in the Start Here channel. It'll explain my setup, my strategy, my technique, my philosophy, but it'll also help you set up all your trading view or your trading accounts so that you don't have those delays. Please control those variables because this game is extremely confusing if you're 10 minutes behind what I'm saying. It's impossible to make money at that point. So spend the 90 minutes that it'll take you to go through all of those things because it'll make you a lot more money in the future. So I really don't know how to make that channel more clear, guys. It's called Start Here for a reason. We cannot ignore that. It is too expensive. So please, guys, right? Please, 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 please control those variables. It is extremely important. Okay, so maybe like a bit of an annoying close. I don't think it was the wrong one. Just a bit annoying with the volume, right? Because that volume is so suspicious. It does not tell me strong bears. But annoying. That's the most annoying reaction we could have possibly gotten there. Nice work, Jason. Well done. Yeah, I mean, I'm not at the moment, Morgan, but normally I live in Whistler. That's where home is for now. And yeah, well done, Jason. What was your exit price? Did that trade put everyone in the green on the day? Hopefully, yeah. Oh, let's go. Well done, team. Good job. Good job, everybody. Nice work, Mark. Well done, Jake. That's not bad, Scott. That's still really good. That's a little bit better volume, but still not convinced. Yeah, nothing too crazy here today. Enough to probably pay for my phone bill for hotspotting off my phone, but that's okay. Very nicely done, Jason. Very nicely done. What was your exit price? Hey, Mike, not bad at all. That's literally a half a point difference. Maybe a bit more than that, but not bad. That's still really good risk management. As like a rule of thumb, guys, right? I would say if you're ever up, I don't know, we'll say up 100 minus 100, that's just a scratch day. And okay, closing maybe didn't feel great in the moment, but I do think it was the right decision. Reluctantly, the right decision. But yeah, trading while hot spotting is definitely an issue. Okay, Charles, minus 350. There sounds like there's definitely some panic closes in there. Like you should be up about $300, right? Give or take. So for there to be a $600, $650 difference between what I have and you have, that's far too much of a difference. So, okay. And you went three contracts then on at 50 with an entry at 54? See, so you made 2 points when I made 15. Okay. So fine. Was the right decision, guys, to get out? Maybe we didn't maximize price, but it was the right decision. Again, if we get our warning signs, we don't want to get cute with it, right? We just want to get out and get impartial. Okay, but if you're using micros to still be down, to still have a $650 difference is crazy, right? So there's still something about your risk management there, Charles, that doesn't make much sense. Because like you should be up approximately, let's say $300 if you're trading minis and you had the exact entries, exits as me, exact same position sizing. And that's not to brag, just trying to establish a baseline here so we can compare something against. So if you're using micros, right, and you're using that to manage your risk, your exposure should be a third, right, or half of what I'm doing. So you need to make sure that your live button is always ticked on YouTube, but I refuse to accept that as an excuse. That is not the reason why there's such a difference. If you're trading micros and there's a $600 difference between our executions, it is not a YouTube problem. Do not blame YouTube. That is ridiculous. There's something else there in your execution that is broken and off, and that's the thing we need to solve. Because your risk exposure, right, should be like you should have been not down ever more than like $300. So something is off there. You need to send me these trades so we can figure it out because that's far too big of a difference. Right now, I don't have any active setups, right? I don't have a really fake out scenario here in play because we've seen that reversal fail. I don't really have a breakout in play because we haven't made a new higher high and we don't have increasing outlier volume. So probably probably going to be hanging out here for now. Like to a certain extent, I've taken 3 trades here today. I'm in a we'll call it foreign execution environment, right? With just like the potential for some dodgy tech issues. So I'm not in a huge rush to push my luck. Especially that I'm green. Like those days where I'm 1 for 3 on the day, but I'm still green. They're kind of like they're kind of bullshit trading days. But they're the days that are actually I want to say the best. They're not the best, but they're a very good proof of concept, right? That our ability to lose small makes it easy to win big. So it's a little bit of like a confidence boosting day, ironically, right? But it's just proves that our math works. So that's like that, Charles. That's why I'm like kind of busting your balls here a little bit about your executions because there's something in your execution math that doesn't make sense and is working against you, and we need to get that fixed if you want to be profitable. So yeah, and last week was a really strong week, Sonia, right? And the week before that was really, really strong. And it wasn't strong because we took a billion trades. It was like strong because we controlled our process and our variables exceptionally well, right? We focused on losing small, we bought deep discounts, and we closed as P&L was increasing. And we've done all of those things here today, and we're green again. So, like, it isn't a coincidence. It's not a surprise. It's not unexpected. It's literally the way our system is designed, right? And so I think your sensation is very similar to mine. I have this thought in my head, but I trade better when I trade less. Right? So I feel a little bit like, okay, I've taken some stabs both directions, had some good, had some bad with it, more good than bad with P&L. But I've now taken 3 trades. All 3 have effectively gone nowhere, right? Or not giving us that like consistent follow through, towards low of day or to make a new high of day. So if I look at the 3 decisions that I have made, all 3 of them I made thinking that this is going to be a trending breakout, right? And all 3 effectively told me that no, shut your mouth, right? So uh, I would rather listen to the feedback that the market is giving me, not press when it's telling me it's not worth pressing, and probably just save mental capital and energy. Because like we've moved from say up towards 945, and then it's kind of just an expanding wedge since, which is not really nice price action. It's kind of gross. And so the chop box, if you want to call it that, that we're dealing with is kind of disgusting. How's everyone feeling? And yeah, Charles, right? We got to make sure that we're adjusting our position sizing based on our stop loss, right? If our stop loss is 10 points, I can go, two minis. If it's 6 points, I can go more. And that's the only way, right, that we're going to be able to keep that math to work in our favor at all times. So if we're not dynamically adjusting our risk to stay within our parameters, that's how you get those oversized losses that you seem to be experiencing. So with TradingView, right, you should be so here's our confirmation at 10 a.m., right? Here's our fake out, which is what we wanted to see on all of our trades, right? So we wanted to see a fake out occur prior to entry. It took 3 candles for the fake out to happen above our confirmation. And then once it did, we jumped in and tried to play this move lower. So effectively, right? Confirmation 10 a.m., fake out that we were looking for at 10:09, entry a few moments later. So, Chris, I need you to. It has nothing to do with the number of candles, right? I'm trying to see the philosophical view that I'm trying to play out occur. So I honestly don't care as long as my original thesis has not been invalidated. So like I need you to start viewing things more philosophically than binary, right? If I get confirmation, my entry doesn't need to be the next candle, right? It could be 20 candles from now, theoretically, as long as my idea has not been invalidated. And so if I'm looking for the fake out thesis, right, and I'm saying I want to see bulls fail first, I need to see that. And then if you go back and you rewatch this trade, or you wait until I post the trades on YouTube, you'll hear me discussing at 10:09 that this increasing volume doesn't scare me because I know a lot of that volume is the sellers rejecting, right, which then confirms or matches my original thesis at 10 a.m. So this candle and this candle are effectively telling me the same story, which is what I'm looking to see after a fake out scenario. So it's got nothing to do with how many candles I waited. Like that doesn't matter. It's really not relevant. It's philosophically, I want to see. We've talked about this start of the day or start of the trading session. If I'm going to be in a bullish trade, I want to see bears fail before I jump in. If I'm in a bearish trade, I want to see bulls fail before I jump in. So what does a failure look like? Well, it's a failed breakout above my confirmation high. And I'll say it's a failed breakout because it closed under the 959.50 or whatever that high was. So we got to be able to, yeah, like understand that each trade that we take is going to be the same strategy, right? It's going to be the same technique. It's going to be the same confirmation standard. But how we execute it is going to be a little bit different each time because the market is different each and every single day, right? So, uh, trading, I'm kind of a believer that it's like half art, half science, right? The science is the system. It's the okay, here's my confirmation, here's my strategy, here's my how I figure out my position sizing, here's how I figure out my entry timing or whatever it is, right? Or work backwards to those variables. The art element of it, right, is taking the context that you're given and using that information to make better decisions. So we've seen, let's say for the last 2.5, 3 months, so basically from the start of the summer to now, we've seen a market that has been more choppy than not, more fake outs than not. And then we already saw multiple fake outs, right, throughout the entire trading day. So once we see that context or once we see that evidence, we have to be able to apply that new information to our strategy and realize that it doesn't change our technique, it further enhances it. And so that's what the obsession is here. So I need you to understand that it's a big picture, right? We're playing the rejection. We've got a good thesis. Okay, now what does strong bulls look like? What do weak bulls look like? What do strong bears look like? What do weak bears look like? And if we can define those things, then seeing something like this isn't scary because we know it's weak bulls. Because if bulls were strong and that volume indicates that they quote unquote are, they would have had no problem holding above 960, right? And creating a new breakout scenario. Tibor, I'm not sure if I understand your question. How do you understand the trade? I don't really know what that means. Could you maybe elaborate? Would that be possible? And again, we shouldn't feel bitter that this thing is at 938 now because this would have faked us out before we got there, right? We would have been stopped out before this thing broke down towards these lows, and we would have been green, huge in drawdown, and then green again. And that's not like a super enjoyable lifestyle, so not worth it. I think realistically, guys, I'm not going to place any further trades here this morning. My OBS is starting to drop frames, which is a little bit of a concern. And I'm green, taking 3 trades. I don't need to do anything else. Really close, Joseph. So same fill price. I closed at 42, so you got like 2 ticks better than me. I got 15 points on that trade. You got 15.5. So you actually outperformed me. Again, Tibor, I don't understand your question. I'm just asking, how would a trade determine a good move? I don't know what that means. How would a trade determine a good move? I don't know what that means. You mean the white numbers? Nice work, Kathy. That's great. That's really well done. Indira, you mean the white numbers on my screen? So where it says like ORB fake out then breakout? Is that what you mean? It's like these numbers. Sounds good, Sean. Green on the day for yourself today? Nice work, Mark. So how do I see when to get in and out of trades? Well, it's based on my system, right? It's all based on my execution rules. So when I map out my trades, right, I box them in using my Fibonacci tool, and I figure out what my point of interest is, right? So I then draw out a blue line, which is my reference price. And so let's say that I'm looking at a setup that looks like, we'll just do it with this because it's a little bit easier. So let's say that this is my setup, right? So I'm looking for a high volume breakdown if this thing ever loads, right? My confirmation is this red candle. So stop loss would be 961. Profit target would be 845. And then I draw my reference price. My reference price is usually going to be on the pullback technique, the first point of contact on my left. So the next high of the candle directly to my left, or like some obvious point, right? So if like the next candle here was 946, and then the one above that was 947, and then the one above that was 948, I would just go to the highest of those three. But let's just say in this context, I'm just going to split the difference. So I'd go 948. Then it's really just as simple as if it's above my blue line, I should get in. If it's not above my blue line, I should wait. And so that is really all it comes down to. Again, I would recommend watching the videos in the Start Here channel, as they're going to explain that technique in a lot more detail. There's a video that's like how to time your entries is what it's called. And so I would recommend reviewing that information, as it'll help you better prepare for your trading day. And then from there, I mean, just looking at the clues, right? So we talked about the what would a strong trade look like? Well, and what would a weak trade look like? Well, a strong trade would have good volume, strong candle shape, and hold lower lows. And so on this example, right, that we played, and we had that breakdown, the next subsequent candles post entry were on the lowest volume of the day, right? Weak candle shapes. So, like, that's not a strong bearish candle. That's not a strong bearish candle. And that's a good looking bearish candle, but it's like a fourth smallest volume of the day. So, none of those things are objectively telling me that my idea is correct, besides the hopium of being green on a position. So again, there's a video on that in the Discord. It's called Advanced Risk Management Techniques. And so what that does is it tells you my rules and shows you, again, examples, right, over how to execute those rules in practice. Yeah, Indra. So those numbers are just previous highs of day, right? Or pre-market highs. So 25,000 here today is the next daily high directly to my left. So if I were to reset this, right, reset chart view, here's the next price to my left that is above where we were pre-market, right? So that's approximately 25,000. And then once we're at all-time highs, I just go 100 points along the way on NQ or 10 points along the way on ES. Again, how I pick my pre-market levels, how I do my pre-market prep system is explained in tremendous amount of detail in the Start Here channel. So I would really recommend, guys, that you go through and you watch that content. My job here during the trading day is to explain my trades, break down my system, and show you guys how I'm making decisions. I don't have the time or honestly the mental capital to be breaking down each decision when I've made a lot of content on that already and how I get to those things. So please meet me halfway, review the material. It'll answer all of your questions. I'm not hiding anything. And it's all really basic and really simple. So would really appreciate if you guys could do that because it saves me tremendous amount of mental capital. And I do my prep live in the morning, right? So I do my prep starting at 9:15 Eastern. We spend the first 15, 20 minutes of the session explaining why we're picking those levels. So if you want to know and you don't want to watch the videos, show up on time. Don't expect me to now bail you out because you couldn't hold up your end of the bargain. It's not really fair. Any other questions here, team? Like more than anything, guys, trading is about doing your preparation, controlling your variables, and then executing. Your job as a trader isn't, right, to just trade. Your job as a trader is to study the market, study yourself, and to study your system. And then trading is the fun part you do in between to test your knowledge. So then go through the other 11 videos. It's not going to take you very long, and it'll make you a lot more money than trading with that indecisive mind. Like a lack of preparation, guys, is not an excuse. It really isn't. Everyone is busy. No one has time. Everyone has things going on in their life. So we got to learn how to choose our priorities, right? All right, guys, final call for questions here. Final call for questions. Yeah, and that's spot on, Kathy, right? Oh yeah, Sean, I'm not um, calling you out in any context here. So please don't take that personally. Not my intention. So guys, there's two sections, right? Start here is like the basics, and then the how to trade with DTR will help you really improve. If you All right, guys. So have yourselves a great rest of the afternoon. Same be like always, right? If you have any questions, hit me up outside of market hours. I will do my best to get back to you as soon as I can. Otherwise, have yourselves a great rest of your Monday. Good job keeping the winning streak going here, right? Nice little streak that we got going on here. That's pushing 10 days, maybe. Let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Yeah, 10 green days in a row. Long may it continue, but I think it's time to go get some British pub food, recharge, and yeah, get ready for the rest of the afternoon. So have yourselves a great day, team, and we'll talk soon.